All right. Welcome, everyone, to another episode, our 17th episode of our 7th year of How I Met Your Mortgage. As always, I'm your host, Adam Smith, with Just the Tips Coaching. And with me, pretty much as always, is our marketing director, one of our other coaches, and all around superhuman, Mrs. Jen Waybor Hart. Come
Hi.
on. I nailed that
Hi.
this time.
You did.
Mrs.
You did.
Hart. So
That's true.
it's only been 6 months or so I'm finally getting
Weird.
used to you being somebody's wife.
I don't know.
Are
It's
you
weird.
getting used to being somebody's wife?
No.
All right.
Not at
Well, I'm willing to say that that's probably also true of our guest today, who's never been somebody else's wife. But welcome back. Welcome back to the show, Dan DeBacco. What's cooking, Dan?
Oh, just living the dream over here, appreciating the sunshine as opposed to some rain snow mix that we had over the weekend. I did an open house and my signs were perfect when I started and then covered with snow when I ended. It was an interesting day to say the least.
Did anybody come to your open house?
They did.
Oh.
It was it's a 50 plus community, Glen Eagles Village and Highlands Ranch. So it's
Sure.
definitely a hot commodity in that neck of the woods.
Yeah. Well, we can certainly have some conversation about the boomer population and their ability to find housing being, well, probably more difficult than a lot of the population trying to find housing that way. Actually, it's really funny. And if memory serves, the last time we had you on the show, you were actually helping them with a property in Florida that had been victimized by Hurricane Ian.
Wow, yeah, great memory. And in fact, too, we finally got rid of that one. It came. We were literally about to close right when the next hurricane came. So it was quite the stressful process, but glad that's in the rearview mirror.
I don't know a better way to say fuck you, Mother Nature, except that. So we'll just stick with it. But I actually think that brings up kind of an interesting subject that we've been talking about a lot in our office, and certainly with our real estate agents and our coaching clients that are both real estate agents and loan originators, that boomer population, and some of us that are even in the subsequent ones, Gen X, even some millennials, are wearing what have been defined as golden handcuffs. Mm-hmm. So we're killing it, right? 2.5% rates on our mortgages. Actually, I never scored anything that low, which is crazy because I'm the mortgage guy. But I think all my properties are in the twos. The lowest is 2 5/8. The highest would be 2 7/8. And that alone makes it very, very difficult to want to make any moves in real estate, particularly when it comes to my primary residence, because even if I'm in that boomer population, even if I'm in that over 50, over 55, whatever I'm entertaining, those kinds of subdivisions or developments, and there are a bunch of them here in the Denver area as well. Well, I guess that is in the Denver area. And my house is in Highlands Ranch, for those of you that aren't aware. So that's really, really in my neighborhood. But with what's gone on in real estate values and with what's gone on in interest rates, I could be making a significant downsize as an empty nester and still paying more. My housing expense could actually be increasing, even if I'm cutting my property in half size-wise. I don't need a 5-bedroom, 4-bathroom house anymore. Let's, do 2-1 or 2-2, whatever the case may be. But with what real estate values have done over that time frame, let's call it 5 years, and what interest rates have done in what's now a shorter time frame, that's really difficult. So that's why we're describing this term golden handcuffs. Yes, it was absolutely solid gold, but now we're kind of bound to it because of what happened and these things that are out of our control, like housing markets, mortgage-backed securities market, general economic issues. I'm not going to get into why I think the Fed makes mistakes in actually managing an economy. At this point, it's hard to believe they can even spell economy. And I get it. I understand Fed policy. I don't agree with it. I don't condone it. But basically the way it was described to me best was that the Fed drives the car using only the rearview mirror. They don't look out the windows to see what's going on. They don't look out the windshield to see what's going to happen. They just have to go off of this historic data. And in the grand scheme of things, that data wasn't all that historic, but now it's how the economy moves and moves so quickly. Even 12-month data is ridiculously historic. So it's very, very challenging, I guess, would be the way to describe it, to try and balance what we do in real estate, what we do in mortgages when we're kind of fighting that enemy, as it were. And of course, it shouldn't be an enemy, which is really weird stuff. But I think that kind of brings us around to what I think would be some relatively genuine conversation today. And before we went live, we were talking about lead gen and and that's obviously kind of the brunt of what we do here at Just the Tips anyway, is help people generate more business. But I had mentioned that there's really never a shortage of people that want to borrow money. Just the who and why that changes. So we've got to change our lead gen. We've got to change the scope of our work. We've got to change our background, our education, our knowledge base. We've been doing a lot of work in the reverse mortgage space, which of course targets that boomer community and helps that boomer community. We've seen a lot of reverse for purchase mortgages, more and more so with every passing month, year, unfortunately, now, as this trend seems to continue. But yeah, same kind of thing. There are tools to help these struggling populations. You guys just have to know what they are, and you have to make sure that you are getting your knowledge base out there, that you're in front of the right people, that you are shifting your lead gen into a market that is going to be beneficial to what our market does.
Yeah, it's definitely an interesting time, especially with even the NAR settlement that has just passed us and is on the verge of possibly being approved, and some changes there in July. And then you've got this huge generational equity wealth, this baby boomer population as well, that that they're just holding on to so much cash. And so is that cash or that equity going to be transferred to the millennials and the generations that are younger? So it's,
wait! Don't skip us, Gen X people. We want our share.
we always look past the Gen X. It's always boomers, millennials.
Yeah, but, very true. And Jen's a millennial, although she doesn't really behave like one. But yeah, I feel obligated to remind all the boomers and all the millennials that there's a generation in between that hates you both.
You're like the middle child. That they always struggle.
We're dubbed the forgotten generation for a good reason. Yes, no question. So, Dan, this can't be the brunt of your business right now, this older 55 and older crowd. I think that's what the restrictions are in some of these housing communities. But what have you been busy with the last year? Because, yeah, boy, we thought we had really thrown a wrench in the works with what the mortgage-backed securities market had done. And then, yeah, it doesn't hold a candle to what the real estate agents are having to deal with, considering those class action lawsuits that went on in federal court in the Midwest and in those district courts in the Midwest. And boy, just every end of the spectrum for chatter about what it's going to look like and what things are going to have to change and be done differently to, well, I've heard plenty of stupid as well. Someone said to me fairly recently, wow, NAR is going to make it a law that if you want to go look at an open house, you have to sign paperwork to walk in the door. I was like, okay, well, wait a minute. I don't know what kinds of things will develop for people doing open houses, but let's be really clear on something. NAR does not make law. NAR does not enforce law. NAR has absolutely nothing to do with the legal process, the judicial process, the lawmaking process. They're a trade organization. So for those of you that are under that impression that NAR is going to make it a law that you have to do this, they're not. So yeah, we can certainly bust that myth right off the bat. But what have you been dealing with, Dan? What kinds of interesting conversations have you had surrounding those lawsuits and the subsequent settlements?
Well, we took it very seriously. So my business partner and wife,
You should.
Katrina,
All of you listening, please do. Yeah.
we spent countless hours just immersing ourselves into all the clickbait because that's let's face it, that's what really sparked all this dialogue.
Yep.
And then we were in countless seminars, webinars, just really getting educated by attorneys and higher ups, both in our with EXP and with NAR, talking to colleagues and whatnot, and just really getting a good grasp. And in fact, we actually put out a special edition of our quarterly report that really just debunked a lot of the myths, and really highlighted what is really transitioning. And at the end of the day, the way we are looking at it is that change is always going to happen, and we need to be regulated to a certain degree. And let's face it, there's some bad apples that were taking advantage of the system, and not necessarily even here in Colorado, but it was national. And so, like anything, when there's a lawsuit, there comes more regulation. That's why our contract probably started at 6 pages and is now over 20. So every time something's added to our contract, it's because somebody got sued.
That's right. And same with mortgage disclosures, I assure you.
Yep. And you guys probably have more of the brunt of it than we do. So we're just getting caught up as real estate agents. So, it's really just about education and having those water cooler talks, dinner table conversations, listing presentations about really what's happening. And ultimately, in the grand scheme of things, nothing's really changed. It's just going to come down to how we have the discussion of commission, really setting yourself apart as a buyer's agent from some of the other agents out there, which makes it a little bit harder barrier of entry, I believe, for some of the newer agents, which is important to team up with a good mentor or be with a great brokerage that's going to bring you up to speed, because it's not as easy to say to a buyer, hey, I get paid at the closing table, I'll open any door for you, let's get to work. Whereas nowadays you have to set the expectation and give you value. And really, I was probably one of the few, even in my brokerage, that was already doing buyers presentations. Whereas I do not take a buyer out unless I have at least spent an hour with them virtually or in person, going through what to expect and the possibility that commissions could be coming out of their pocket. I have not had that experience yet in my going on 10 years of real estate practice, but of course that's going to be more of a dialogue that we need to be having with our folks. And so I'd be interested to see too what the VA and FHA does with that, with bundling possibly commissions into the loan. I'd be curious to hear, Adam, what your take is on that. But really the dialogue has just been more education and just getting people comfortable with the lingo that's out there.
I think that that's true. And I think it is important to really understand that none of this really changes anything other than the fact that we may very well be making the consumer more aware of the fact that, hey, in your real estate process, buying and selling homes, everything is negotiable. Mm-hmm. That's basically the gist. And of course, which is why these lawsuits bothered me so much. I failed to see where there was any kind of antitrust violation, which was kind of the basis of how these were brought. So it's a little interesting. And of course, I think the end result has actually been more harmful to the consumer than beneficial, but neither here nor there. And yes, I do agree with you that I think we'll need to see some changes in lending guidelines, particularly on government paper, in order to accommodate what's going on, what those changes look like. We do a quarterly event for agents to discuss, I guess, what Jen and I would describe as hot topics in the industry at that point. And we did do that earlier this month with this exact topic. And one of the things that you mentioned that makes me reminiscent of one of the topics we discussed then is that there are bad apples in the business. There are bad operators in the business. And while it's funny, not funny, I joke all the time about the fact that in any licensed industry, 99% are giving the rest a bad name. And unfortunately, real estate, mortgages, attorneys, doctors, dentists, hairdressers, all of you, that you have to fight that fight. It is what it is. I think one of the big concerns that I saw or that was discussed, and maybe Jen will help me clarify how this actually was laid out, was that we may very well start to see where some of these bad operators, these bad apples, will now start looking heavily at buyer's agreements and what those commission structures are, because they are going to be more inclined to steer their seller into a deal where the buyer's agent only wants a 1% co-op instead of 2 or 2.8 or whatever the case may be. So I think we're actually opening the doors. We're closing some doors to bad operators. We're opening more doors to different bad operators, these kinds of things. So I do have concerns about what this is going. Did I get that right, Jen? Is that kind of how the discussion went?
Yeah, that's what they were saying at the roundtable. Yep.
Okay. So yeah, I definitely have concerns for the agents that have been around a long time, have done good work, take good care of people, do provide a lot of value for what they get. And there's so many things out there floating around that are just such significant misgivings. I did see a recent amount of chatter on Nextdoor, and yes, I know I shouldn't even fucking look at Nextdoor. If you're gonna, there's a reason that there are social media pages on other platforms that strictly make fun of what goes on Nextdoor, because it is. And there was a woman on an absolute tirade about the fact that her daughter was the home buyer, found the house herself, and by the way, daughter, so did I. Actually, my wife found this house. Our real estate agent didn't have anything to do with it. It wasn't even in the search that we had asked the real estate agent to set up. We found the house, and it is insignificant. It's less than 1% of what a real estate agent actually handles in a real estate transaction. But yeah, this woman was just flying off the handle, so upset that the real estate agent should have never been paid because it was actually the home buyer, her daughter, that found the house and not the agent. Somehow, I don't think that home buyer actually went through all the legal work of contract law, negotiations, inspection resolutions, appraisal, all the things that actually go into the workload of being a real estate agent. Because finding a house isn't that. I can do that shit on Zillow if I have to. That's not something that is, you don't need a real estate license to find the house. You need a real estate license, that education, that skill set to do all the rest of the shit that is subsequent to finding a house. So that I still think is going to present a lot more in the way of misgivings of what the consumer thinks a real estate agent actually does. And Dan, I know you don't have the real old dog experience that some of us do. There were a couple of people in that audience at the round table that had been at this as long or longer than I have been, and said, well, yeah, we watched the lenders go through it after 07, 08. So it's just our turn. And yep, that's basically right. It's just your turn. We're going to make things different. We're going to add some additional scrutiny, and we're going to kind of change the steps of how this shit gets done. But that's really it. All we're going to do is just change the steps.
That's it. And I next door, I always call, what is Chad and Karen saying feed?
Is it Chad? I always thought it was Luke. No, Kyle. No, it's Kyle and Karen. Yeah.
Yep.
Sorry to all the Kyles I know.
It's definitely a venting platform, as I've come to see. So, and with that in mind too, I think what I've at least been seeing in dialogues with clients, friends, family, is that folks are less prone to listening, reading, and accepting what they're seeing. People are a little bit more skeptical about seeing that clickbait, and so they're starting to be a little bit more inquisitive to the actual experts. But let's face it, when it comes to a buyer finding a house, I'll admit there's been times where a client has found the house and it didn't directly come from one of my platforms that sends the automation, and that's okay. Back in the day, the old dogs, the old guard, they would get their book of the MLS, for the week.
Book.
Yep. And they would be the ones responsible and knowing they were their own human MapQuest. They had to know the directions themselves and know how to get to a backyard property in Harris Park Estates in Bailey, Colorado. You know,
I think we could talk about map books in that roundtable event as well. Yeah, because that's how we did it.
Right.
There was no GPS. There was no MapQuest.
Yep. And so it's times have changed, and when you have the older generation, like this example that you brought up of this mother that was venting, you know, she had an experience prior that was very comparable to the books and that level of different expertise that these agents have. Whereas there's a new type of requirement of expertise that agents need to have. So it's just the involvement of the industry and knowing those nuances and being an ample negotiator and having the ability to preemptively educate and go above and beyond in ways that aren't necessarily even contract based, such as being at the inspection or having your list of vendors to provide when an inspection item comes up and what's that estimate going to be. And you know, the other ad hoc elements that go into purchasing a house is the big separator, I believe, and that's what differentiates Katrina and I, is that we go above and beyond in different ways that aren't just based to the traditional transaction. And that's where I believe agents need to be really showing their value and sharing examples of what they've done for clients, and also really leveraging their review platform so that other people, new prospects, can see what other experiences other buyers and sellers have had.
Oh, no question. Yeah. And for those of you that are real estate agents that have been for quite a while, that are going to continue to do this and are going to make sure that you are reflecting where you provide that value. A big part of that, like Dan just mentioned, is what your past clients have said about you. If you are not actively pursuing a heavy review campaign, if there aren't hundreds of things, positive things, let's rephrase that, positive things being said about you on Google, on Facebook, on Zillow, as much as I hate to even rope that organization into the conversation, on LinkedIn, whatever, if you're not actively doing a review campaign to generate that commentary and then to spotlight that commentary, please get on the train. Get yourself a review campaign set up, solicit those reviews, and then promote them when you do get them. But yeah, please, oh my gosh, the volume of people I see that aren't participating in some kind of a review campaign just blows my mind. And this isn't new. The consumer has had the opportunity to go see what other consumers say about you for a long time. Make sure that they're seeing what you want them to see. Make sure that you are getting all of these people who loved working with you to say things about you as to why they loved working with you. This is an important piece of the puzzle. I won't get into the details of how we run ours, but while it's mostly systemized and automated at this point, it's robust. We get a lot of reviews. We have a lot of past clients do that. We use that content in a very strategic manner. And unfortunately, we do have to promote some websites in order to make that happen. You know, I don't even want to get into Zillow and benefits and deficits, but let's not ignore the fact that the consumer digs it. The consumer digs Zillow. They think that's the end all be all for what goes on in real estate. And whether that's your opinion or not is irrelevant. Perception is reality when it comes to your clients. And they dig it. They eat it up with a spoon. Make sure you're taking advantage of what services they do provide, like getting your past clients to write you reviews on Zillow. Please make sure that you are doing that. All right.
Ugh. Well, another good suggestion too, Adam. Another good suggestion too is, I mean, you have Google and you have YouTube. YouTube is actually the second most searched platform next to Google itself. So
Uh-oh.
if you're worried about,
I think we're going to have to fact check some of that shit, Dan, but go on.
fair enough. That's at least
and
the
just so
facts
you're
I
aware,
heard.
just so you're all aware, the number one search engine right now is TikTok.
It's TikTok.
Oh, geez.
More people do internet searches on TikTok than on Google, which is still second and was dethroned after nearly 2 decades. And of course, YouTube is Google. So there are a lot of promotions, including Google dumping a ton of money into YouTube Shorts to try and regain that shit that they lost to TikTok. But yes, go on, Dan. Why is YouTube of importance?
Because what you can actually be doing is getting video testimonials.
Ooh,
So that way you're showing, it's not just some robot AI or you and telling your mother-in-law to write you a review. It is an actual person that is giving you an experience about how it was with you. And then what you could also do is then transcribe that review and then send it to them with the link to Zillow or Realtor or Google, wherever else you have your review platform. So that way it's double-ended and put in and cascaded into multiple areas. But having that visual, quick, short, video of describing the experience with you goes a long way. And you can put that on your website. And make sure to make it short because, we all know we have those short attention spans.
Yes, we do. And it's funny because years and years ago, we used to do this fantastic video marketing event in Northern California. I can't remember what time of year, but springtime, I think. And one of the things we worked on pretty heavily one year was those testimonial videos. And I still have some of them from some of my colleagues, a mortgage lender in California that did one for us, and another in Ohio that did one for us, so on and so forth. But obviously that was more along the lines of playing, demonstrating, not actual rubber to the road type of videos that should really come from your clients, of course, or colleagues. We were to do one, if our mortgage company was to do one about you and how much we enjoyed working with you as a buyer's agent on a particular transaction, and obviously having the buyer do one. Yeah, very, very valuable. And I don't know why we don't talk much about it, Jen. It's probably frickin' brilliant for short form.
Yeah.
With TikTok and Reels and Shorts, YouTube
Absolutely.
Shorts, that would be killer content for short form video. All of you watching or listening, take note. Client testimonials in short form video would be some killer stuff, no doubt. Good idea, Dan. All right, you guys heard it from Dan DeBacco. All credit where credit's due.
Happy to contribute.
Do your client testimonial videos. Get them done. Way more valuable than that stupid photo you guys are all taking at closing with the giant cardboard key. Knock that off. Your buyers have more important shit to worry about at that particular moment. They got moving truck on their mind. Let them go. All right. Well, very cool stuff. So what do you think is going to bode for the real estate community for the rest of the year? Dan, what are we going to see? We'll see a bigger exodus than normal. Historically, 80% of agents fail in the first 2 years, 85 in the first 5 years. That number going to go up? Are we going to see less people trying to break into the business? What do you think we're going to see because of what's going to transpire later this year?
It's hard to say, to be quite honest, because we're building our team. So we've been pedal to the metal. We've been actively marketing the same way, if not even more, growing the team. And in fact, most of my recruits are some folks out of college. I've got a mentee brand new agent. And, we go through the interview process with them and we're looking for a certain caliber of individual. And this one in particular individual that we have is I'm mind blown with his work ethic, his character, and his ability to be a sponge and get out there and pound pavement, as my dad would say. And so it's interesting because you've got young kids that are excited to get into this industry, even though we know the first-time home buyer pool is the most daunting because of how high interest rates are and the prices of homes and the down payment that they may or may not have. Then you've got some of your old guard that's looking to finally retire and push out of the market. and move on to greener pastures. And then you've got, folks like myself that are maybe looking at a career transition. They enjoyed the gold rush while it was there and whatnot. But then, of course, you've got folks that are in it for the long haul, like Katrina and I. And we, you just have to be prepared for your ups and downs, your ebbs and flows. I will say that in the 10 years, going on 10 years of experience we've had, this is now, I feel like, the first cycle of our trough, if you will. It's been kind of drinking out of a fire hose for the past 8 years, between, the boom leading up till COVID. And then, of course, we all know what happened during COVID. So, we knew this time was coming. And, having the experience in the industry, that there's ebbs and flows in the market. And it's just knowing that you're prepared to wait it out.
Or pivot with it.
That's right.
Yeah. I think that's very valuable. Very valuable words from this week's guest, Dan DeBacco. Thanks, Dan.
Always a pleasure. Thank you.
I knew we would run over time, and as usual, we do. We always do when we have you on the show.
Always.
So no surprise there. But yeah, some really valuable shit this week from Dan. So thanks for that, man. We do appreciate it. And I know it's not easy to carve this kind of time out on a Monday morning. And yes, it is morning where we are. We always talk about the show, and we will again. If you guys do want to catch episodes live of How I Met Your Mortgage, we do that on Mondays at 9:30 Pacific time, 12:30 Eastern time on LinkedIn, YouTube, and Facebook. And then obviously you can catch the podcast later in the week on Apple, Spotify, and Amazon. But before we really cut our audience loose, Jen, we've got some other shit going on. You probably want to talk about Social Media Day. Do we still have tickets?
Yeah, Social Media Day Denver is Friday, June 14th on the Auraria campus up in, well, I say up in Denver because it is up for me. And we do still have tickets available at socialmediadaydenver.com, or you can message Adam or myself to get the direct link for the Eventbrite. We've got some really cool new speakers this year. Tangible things like Google My Business, and we'll talk about Canva, we'll talk about AI, but also mental health around social media, which I think is really cool and really important too. So again, that's
I'm
Friday,
really
June 14th.
looking forward to that content and meeting that speaker.
Yeah. Small world.
For 1,000 reasons, yeah, but I am jazzed about that presentation.
Yeah. Other than that, you can find out all the things for Just the Tips Coaching at justthetipscoaching.com, including copies of Adam's books, booking one-on-one coaching with us, day with Adam and Jen, all the things, justthetipscoaching.com.
Okay, we're freaking busy.
Yeah.
And I will say, I read your book, Adam, and it was fantastic.
Oh, thank you.
So
that you're referring to Just the Tips.
Right. Yep.
Which is where all this started. And yeah, thank you. That's certainly still one of the jewels in my crown, as it were. I loved writing it, loved going through the publishing process, and yeah, every now and then I still have a moment of cloud nine where I'm like, oh yeah, I really am a published author, and have seen my book in stores and people reading it in airports, and it's pretty wild. It's pretty cool. So thank you. Yeah, heartwarming type of stuff there. And yeah, Jen, let's get Dan booked for another show. Because by the time that rolls around, we're going to be right in the thick of all of these changes. That should be a whole another world of what real estate agents are dealing with in that time frame. It should be really cool. And thanks, both of you. I appreciate you guys being here, carving out the time. And for those of you listening or watching, please do note again that you can tune in live on Monday mornings at 9:30 Pacific, 12:30 Eastern on YouTube, LinkedIn, and Facebook. And you can catch the How I Met Your Mortgage podcast 48 hours later on Wednesdays on Apple, Spotify, and Amazon podcasts. And to those of you watching or listening, we'll see you next week. Bye.
Thanks, guys.